Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. We'll be live in a second. All right, so we're live. So excited to have my guest today, Farooq Abbasi from Preface Ventures. Farooq, welcome to the show. Glad to have you as a new friend. We met through a common acquaintance and, enjoyed chatting with you a couple weeks ago. And thanks for being generous with your time and making time for me and the community.
Yeah, happy to. And it's funny you say preface like a Brit. Americans say preface. British Europeans say preface. But yeah, the genesis of the firm or the name is we say that we're the capital before your story. There's a lot of venture capitalists take a ton of credit for entrepreneurial success. Like all these blog posts about like, Joel came in on a Tuesday and I knew exactly he was the guy or he was the girl, whatever. Like, so anyway, try to actually have a name that has humility as an underpinning.
No, I love that. Yeah. And this is the first time that somebody said that I sound like a Brit. So I'll take that as a huge compliment. I mean, when I think of British people, they definitely have like a refined vibe. I'm originally from Florida. So some people might say I have like a Southern twang, but
Okay.
in New York now. But it's not about me, Farooq. It's about you. So let's talk about Farooq. Like, where did you grow up? What did you study? What did you want to do early on? And how'd you end up in venture? And then how'd you end up launching Preface?
Yeah, sure. So grew up in Chicago. That's where my family is from. Family is originally from India. So everyone was born there. Parents, brothers, sisters, minus me and my sister. And then, I was basically in Chicago until I was 24. I studied physics and finance. I think I graduated with like 250 credit hours. I didn't know what I wanted to do, and unsurprisingly, like a lot of Southeast Asians, immigrants who kind of came in the 70s and the 80s. Like a lot of my family, full of physicians, brother, dad, 35 first cousins. They're all doctors. Fortunately, my older sister, she bucked the trend, and then she actually also went to college in Chicago, and then she dropped out with her now husband and took a company public in like retail and supply chain. Her story is important. It impacts mine because she had an Indian kind of like, overachiever, chip on her shoulder sort of ness to her. And then she went to finish her school and then went to Stanford for business school. And that's where I actually met my mentor. And so Mood Raghani, he was the general partner and co-founder of Bond Capital. And that's known mostly for like spinning out of Kleiner Perkins. And so I don't know if people on this, who will see this know the Internet Trends report that Mary Meeker has done for many years. And so he co-founded Bond Capital with Mary Meeker. The path to venture. So he got me my first internship at General Catalyst. I helped them incubate a company that wound up becoming SeatGeek. If people use it for sort of online event tickets. And then I just knew I wanted to do. I liked entrepreneurship, but I liked the kind of like financing and investment and market analysis, and actually risk. Like, entrepreneurship is more risky than venture capital is, just by nature of, a VC invests in lots of companies and an entrepreneur invests in one company with his or her their time. But I just loved that kind of mindset. And then out of college, I emailed 1,000 people to basically be like, hey, hire me. I'll work really hard.
Yeah.
And actually, 15 years ago in venture capital, or 16, actually, I should say, it's pretty uncommon to go into the industry without like consulting, investment banking sort of background. I mean, it's still not a very like diverse or experientially diverse industry, but it's more so for sure now than before. And also, I feel like now it's way more like trendy. Like you have Mark Zuckerberg and like Elon Musk, like, gonna fight each other in the MMA octagon. Like that kind of stuff didn't really happen 15 or so years ago. But anyway, I wound up getting a full-time internship opportunity at a Chicago-based venture capital firm called Sandbox Industries. They were the manager for Blue Cross Blue Shield's venture funds, and so invested in a bunch of different companies there, which is great. And took that experience. I worked at a European U.S. firm called DN Capital, and then following that, joined a firm on the West Coast called Costanoa. And what's been great is 80 companies in that history, always at sort of seed stage. 5 of them have gone public. A handful have been bought for a couple billion, some for a couple $100 million.
Mm-hmm.
Also like shutdowns and difficult situations. Founders get divorced and sick and bad market timing, but it's a really good fit for me, and I find a lot of fulfillment in it.
Mm-hmm.
And it's like a good fit, like good hit rate, and the way that I've come to do it and how to practice venture capital, because everyone does it differently, right? And it's kind of like religion. You could be like an atheist, a Jewish person, Christian, Muslim. As long as you're a good person, you're a good person. Some people like to do late stage. Some people like to do 1 check a year. Some like to do 50 checks in a year or in a fund life cycle. Some folks have biases in connecting with technical founders. Others have biases in connecting with, immigrants, or maybe Stanford dropouts. Like, everyone has sort of different flavors. My flavor has always been backing a repeat founder, so someone who's made money, had a success, had an exit. So that's pretty much so. Preface is the fund that we talked about earlier. That's the fund that I'm the sole GP of, and what we exclusively do is invest in repeat founders when they want to go for a second bigger swing. So let's take you, Joel. Like, let's say hypothetically, you studied at like IIT Bangalore, you came to the United States, you did your master's at USC, you because maybe you couldn't afford going to Stanford or USC paid for your scholarship. You worked at Oracle for 5 to 7 years, really strong individual contributor, and then eventually you're like, you know what, I'm going to do this entrepreneurship Silicon Valley thing, and then you go and found a company and you raise money, and like you weren't like an insider, like you kind of have an outsider sort of mentality. You were technical, and then you raise money, maybe a seed, maybe an A, and then you had that kind of first hard won exit. And maybe it was 50 million, 70 million, 100 million, 150, 250, something that was like meaningful and life changing for you. What you'll do is you'll get acquired. In the first year, you'll do what I think most people would do, which is basically like donate to nonprofits and buy a house for their mom, and like take like a couple months off. But more commonly, what they do is they get kind of like locked into the mothership for 2 years. And then in that second year, your new boss, let's say it was me, I'll say like, Joel, we're getting killed at Cisco in identity and access management. And what you'll do as like an entrepreneurial leader, you'll own this P&L, you'll have this sort of like product line, and you'll say like, you know what, I'm going to look at all the vendors, I'm going to look at open source solutions, and I'm going to build something in-house. And I'll solve this because I'm going to do that. And in that process, you're already starting your pre-product market fit work for your next thing, which might not be obvious to you at the time. But eventually you'll get bored, and then you're going to leave, and then you'll leave and you'll put in 250, 500K, $1 million bucks. Perhaps we'll put in $1 to $2 million, and we'll go off to the races. And that's basically the founding story of some of the most profitable, most interesting companies like Zoom and like, Slack. Like, examples sort of go on in these sort of internal projects and products that spin out. And I really enjoy it. Anyway, I'll pause for a second because I just gave you a lot of information about.
No, that was really helpful.
Yeah, where I grew up, how I got into venture, and then launching Preface and what it does.
Yeah, I think there's a couple things to riff on. So one of the first things is emailing 1,000 people to get that first internship. So I truly believe, and I've harped on this a few times, like, volume is super important, right? When it comes to fundraising, when it comes to getting a job, when it comes to dating, right? Like, having that larger, the more volume you have in your pipeline, that's going to go down to the funnel to qualify to eventually find the right opportunity, whatever it is. So I appreciated you kind of saying, look, you know what, I didn't expect this internship to be a warm intro or, have somebody hire me on recruiting day through the university. But I went out there and I kind of like, did do extensive outreach to kind of create those leads in the pipeline. And Wanted to hear your thoughts on that as you're supporting some of these founders as they're building like a sales strategy. What are some learnings in terms of pipeline to funnel to closing, whether it's enterprise or consumer? And do you have a focus in terms of industry or type of business, or it's really just like, look, this is an amazing founder? Yeah.
I'll start with that. So the founder selection is a really important piece. We even have algorithmic approaches and a bunch of C-level executives of public companies that help us discover these people who are spinning out of their organizations. Enterprise. I enjoy underwriting technical risk. Pre-revenue, you have this like chunky, meaty problem, and cybersecurity or developer tooling, or maybe if you're working at the commercial organization of a hospital or an insurer, like software to better manage like these core, like critical need to have kind of solutions. Like that's the kind of stuff that I'm drawn to, and it kind of matches the companies that I've invested in that have gone public and exited. So hopefully there's some learnings to glean from that. Yes. So on funnel. So for one, I would just say holistically and philosophically, if someone has a good process and you believe that you should be in the room, you're going to be correct eventually, and the door will open for you. And it may take a lot of volume. And so I think for job, I would disagree with you. I don't think dating, you should just be like, bam, 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 swipe right, swipe right. But but I think in some categories, for sure, like of where you sort of spend time, it's a very like healthy and good thing to do. In entrepreneurship, what's probably maybe the most important thing if you're like leaving to sort of start a company, like identification of your ideal customer profile is just massive. So like one of the unfortunate byproducts, but it's also a motivator, right? If you're on the clock, it's like you're playing a sport and like you have your runway, right? You have 2 quarters, 3 quarters, 6 quarters. Just to use a kind of a basketball example, right? You're in the second half of this game. How are you going to use your time and attempts really effectively and those resources most effectively? So constant experimentation. So it's starting in the funnel. Constant experimentation is the beginning part, but even before that, let's say the preface of it. The preface of it is like have conversations with like tens of people or even hundreds of people and better understand like who the profile is you'd be selling to or who would be using the product. And sometimes those things are the same and sometimes they're different. Better identify like what they're currently using, what their pains are, and be more in a fact-finding mode, and don't tell them stuff and the way to sort of find that or open up that conversation is just like a spirit of helpfulness, right? This is one good thing about the Silicon Valley. Like if one of my friends wants to get into venture, or let's say if one of my friends wants to start a company, and just early on say, hey, like, I'd just love to get your advice. Like I'm exploring the space and would really appreciate just like 15 minutes of your time, and promise I'll pay it forward. Or like, or I won't forget it, like that kind of thing. People tend to rally towards folks who are enthusiastic and who are putting themselves out there and showing vulnerability can be met with a lot of goodness. And so do that, have all those conversations, then start building, kind of co-build, find like a couple of people within enterprise, find a couple of people that are kind of customer design partners. You give them sweetheart deals, maybe you offer the product for free, maybe you connect them and sort of pay it forward and introduce them to other peers because they want to kind of network with their own peers. And then when you have an identification of an ideal customer profile and like what are the kind of components and characteristics, it's like, I don't know, there's like a sales framework called MEDIC if people want to like look that up, but it's like, who's the champion, how much is the pain, how much is the cost, all this sort of stuff. And then at that point, you start that top of funnel. But unlike emailing 1,000 people for me, where I was just like, hey, I'll do anything like to be there. When you're an entrepreneur, like you actually shouldn't do anything for a customer. You should actually do the thing that you kind of wish to sort of build that's reproducible. And so, I mean, I would say don't email 1,000 people after that point. Like keep it to sort of like, if it's an enterprise, keep it to like a dirty dozen, or if it's in consumer, a couple hundred people, or like some kind of level of statistical significance where the behavior of 1 or 2 or 5 like represents like a larger space, and so that gives you more intelligence on how to spend money and time and resources and human capital to sort of build that funnel. Um, like investing in product analytics is huge. So we even have a portfolio company called Funnel Story, which during kind of proof of concepts and trials can understand like product hooks, who's using it, where are they getting stopped, where are they getting kind of like hindered in these pieces, and maybe the consumer version of that is like surveying or kind of like, hey, you're unsubscribing, like why, and like getting sort of that feedback. Just try to get as much of those like quantifiable digital sort of touch points, and then yeah, I mean, and the second you have like some reproducibility, and reproducibility, you actually can be quantitative about it, right? Like there's when people talk about like ramping up a sales team, or our unit economics are scalable, or our marketing channels are scalable. It's because like there's some repeatability, where if I give you, Joel, $1 million, like you'll generally know plus or minus 20%, like how much revenue it'll, and hopefully margin, actually it's even better, will actually like provide for you. And then based on who your customer or user is, consumer, enterprise, big enterprise, small enterprise, mid-level enterprise, there are comps for this. So, if you're going to sell a 100K deal to a Fortune 2000, it's probably going to take you 6 months of a sales cycle, and then the implementation cycle will probably take you like 3 weeks or a month, and then hopefully they'll pay you up front, and that's like a 7 or 8 month payback. Like that's pretty solid. But if that takes 2 years of selling, like you're in the second half of the basketball game, like you're gonna lose. Like you can't. And so it's either a product issue or a customer issue.
Yeah, and I mean, there's also companies that kind of get stuck in pilots, right? So they get some customers to sign on doing like a pilot. It's maybe even a paid pilot, but then they never really convert to kind of the full suite of products and become a full paying customer. So I've seen that in the past too. Just kind of not really getting people over the edge, and it's 9 to 10 months that has passed, and they try to use that as reportable KPIs. Oh my God, we have like 10 paying pilots. But you can kind of look at the data and see, what kind of revenue that's led to. So I think looking at some of those key points are really interesting.
Yeah. So my suggestion there, I mean, is get people. Again, most of what Preface does is enterprise. Like I've invested in, Shazam and AutoOne and Remitly and consumer stuff and Truebill. Like I've invested in consumer stuff, but most of what I do is enterprise. Yeah. Get your enterprises to do like a paid pilot pretty much always, like 5K, 10K, something where it requires like a little bit of elevation to procurement, but not like full sort of shebang. And then have it be like a 3, like where your proof of concept, where like this does renew to full average contract value if we satisfy these conditions. Instead of having that kind of revisit conversation at the end, be like, okay, like, hey, so like, what'd you think? And then they're like, oh, that was good, and appreciate it. It's been great to collaborate. We'll love to keep in touch. Like, you want to have like having defined next steps is like a really, really good thing. In everything, like, and it's no big deal. Like, it's no big deal to sort of like point your head forward and be like, hey, look, like what's next up here? Like, here's how I see it. I see we'll do this pilot. We'll deliver value. Here are the conditions, and then ideally by August of next year, like we'll be kind of doing a fuller rollout and in kind of a full sort of contract. And I'm excited to continue to drive value for you. Like so, don't get that's a way to avoid getting stuck in like pilot hell.
Yeah, I mean, I spent my early career working in enterprise fintech for a large financial terminal. And one thing that was really interesting was making it sticky with some type of secret sauce of data and analytics that's very, amazing to the customer. So the customer kind of like hooks in, and then you give them this really interesting insight. And obviously, if they cancel the subscription, they kind of lose that huge value. So some of that kind of makes me think about product-led growth. And you talked about Slack and you talked about Zoom. From my understanding, Slack was I think it was like a gaming company in the beginning. Is that the history around that? And then Zoom.
Correct.
Yeah. And then can you unpack the story of Zoom? And then I'd love to maybe just jam a little bit on product-led growth and your opinions on that, especially the successful companies that you've seen really nail that.
Yeah. So the story of Zoom, let's start with that one. So Eric Wan was the VP of engineering. So he was very early there. And then Cisco acquired WebEx, he was a VP of engineering of WebEx. So WebEx was acquired by Cisco for like $680 million. He was there and he wanted to like do internal projects and make this product like better and better and better. And then at some point he's like, this sucks. Like I want to do it bigger, better, and like my way. And what was wonderful is when he left, he had 60 engineers resign and want to join him because he's such like a well-loved leader.
Yeah.
And he had customers like poker buddies in his sort of back pocket who are like in collaboration, like basically like, he had an awesome Rolodex of customers. The tough thing though, fundraising for him was hard. Everyone said like, hey, you should find a commercial co-founder. You're a little too technical. Now he's like Time Man of the Year. And, people forget it was actually one of the few businesses that was profitable upon IPO. And this is pre-COVID, right? Like it was just a really solid, scalable business. Unfortunately, like a lot of his ex-colleagues backed him, but then the Emergence guys, I think gave him a $5 million check, and then I think they invested in them again. And then following that, Pat Grady at Sequoia offered him like $100 million, and then that was the last money he ever needed to raise before going public. So just a really wonderful story of, again, immigrant guy, came here, made some money, had some success, was a really important critical builder in a large company, and wanted to go for a second bigger swing as like a founder and like maybe a little bit of an adjacent role, like unloved, underappreciated, but then like again was very capital efficient, and like capital efficiency is the key. The more capital efficient the founders are who are listening on this podcast or interview, is like the better your life is going to be. Like you don't need to rely on people. You can get to profitability. You can turn off marketing and sales, and like this is why I also like to be a seed investor, because what happens to me, I mean, common shares versus preferred shares, sure, but like what happens to the seed people is pretty much what happens to the founders, right? Generally. So and then Slack, I mean, same thing, like where a very talented repeat founder was building Slack. I think it was the co-founder of Flickr. Stuart Butterfield. And he, raised money for this gaming company, and then eventually emailed everyone saying like, hey, I'm going to return the capital. Like, this is not working. And then internally to collaborate, they build this little tool to do comms, and then eventually like shared that. And the investors were like, no, why don't you just use the money to do this instead? And then fast forward, it became one of the really early wins of sort of product-led growth. And you actually had that as a question. So for product-led growth stuff, it can't be the only channel, it can't be the only funnel. That's like, if people are spending money on sales and marketing, like all these things are like wells. You just need to tap in new wells and hopefully have things like work well. What's wonderful about enterprise software and just software in general right now is like, you don't need to go and download it on premise. You can download it through the internet, like through cloud. Like it's pretty wonderful. But the mechanism, like you need to have like A plus like mechanisms for like product hooks and expansion and virality. And then, but really at the beginning, that product-led growth stuff, it's just like a really qualified funnel. And so you're going to have a touch point at some point of some sort of either automated sales or like maybe even in-person or Zoom type sort of sales for the stuff at some point. So it's just like I love product-led growth, and there's some really wonderful examples, but there's so many failures. If you're putting all your eggs in that bucket, it's just too much.
Sure. Yeah, and I think with Zoom, I mean, a couple interesting things with Zoom and with Slack. So when Zoom was kind of getting a little more popularity during COVID, people that had the free plan, they'd get kind of this buzzer saying, oh, your time's up. You've only, you're on the free plan. So, people would get kicked out, and maybe it would get embarrassing. So people would probably just upgrade for that. And then with Slack too, you know, I mean, obviously if you're a power user, you may want some of the history, the conversation history, before you get kicked out. So, but you know, having a lot of those free features definitely get people in the door. Calendly did the same thing. And then, you know, we all read the news about Loom last week. So I always thought in my mind, you know, why couldn't Zoom just have this one button where you can just immediately record a quick video and send a link out? And I don't think, you know, Zoom had that feature, but Loom built an entire company around really just quickly just sharing a video. So I think, you know, just my macro take on this is like really, really doing good and, you know, being super narrow on a super focused problem is really important. But then, you know, as Loom joins the Atlassian family, you know, Atlassian has all these different product suites and services. So, you know, that expands their offerings. But then I've also seen companies like HubSpot and Monday.com that have also gotten an edge because they've expanded to really support all the ends of the workflow. Same with Monday.com, right? I mean, so I think that's kind of been interesting to see as companies mature. I mean, look at LinkedIn, right? LinkedIn, there's so many different personas, right? You could be an advertiser, you could just be an influencer. So I think I've seen that definitely, like, you know, as you mature, you just have much more product suites to land and expand to more customers to increase your, you know, your annual revenue and profitability. But wanted to get your take on that in terms of like the evolution of companies and things that they need to think about as they get to the next milestones, and even post being public, or just post exit. You know, what have you seen in terms of the maturity of those companies?
Yeah. I mean, let's take the Loom example. And again, it was an investor. I have some friends that were like Trevor at General Catalyst and on the Point Nine guys as well. Like actually, that company grew super, super, super fast at the beginning, but it actually flattened out at one point. It flattened out at one point because it only relied on sort of product-led growth. But what was nice about it, I mean, I'm not like a user, but my perception of it was like it excelled in sort of like co-browsing, where co-browsing, sharing, pointing stuff. I mean, of course, you use for sales collateral or customer support or inside of a company, kind of product sort of knowledge type stuff, but it's for content that's like library and sort of reproducible. Like Zoom is different, right? Zoom is, I mean, yeah, people record Zooms for webinars and stuff, but like Zoom is predominantly for like sales and sort of like live conversations. And like, you know, Loom had really wonderful async, so sync versus async. Yeah, this wonderful thing about these markets is they're just so large, right? Like, I mean, software penetration is still like tiny, very, very, very tiny. In all these and many situations, and so that's why technology is a great place to sort of spend time. But yeah, I mean, but as they grow, so like at some point, whether it's Loom or Zoom or whatever, like they are going to, you know, they'll build their sort of product suite, because then you know net revenue retention really wasn't, even for public companies, right? People always sort of talk about net revenue retention and growing with kind of customer base. It's funny, like if Redpoint did this analysis, like it's a little dated, but that net revenue retention as a metric was a better predictor of a strong Series A, even more so than like month over month growth or the absolute sort of ARR number at the time. It's funny enough, like if you look at public SaaS companies, if you basically do like net revenue retention and then also sales and marketing payback, and then you add growth, like those three metrics, if you just like rank them, the highest, best enterprise value to revenue multiples and like enterprise values of these businesses is better if they perform there. So yeah, like, you know, I guess in short, you know, getting better on product, like be narrow, and then eventually like enjoy the narrow, be specific. And then once you have kind of like a real hold on a sort of subsegment, then start thinking really like critically and carefully about how to expand product, and then also multiply the or I should say add sort of channel leverage, where, you know, maybe it's you do channel stuff, maybe you do direct sales, maybe you do inbound, and just keep on experimenting until like the blend is positive.
Yeah. I mean, there's a product feature. I mean, there's definitely a change in the product that I noticed specifically with Loom. So I was I definitely love Loom a lot. I mean, it actually saved me a couple meetings. So there was a couple times where I had to meet with somebody and I was like, hey, you know what, just watch this video. This should cover everything you need to know. And they would send me back a video. So the async was very valuable, but it was interesting. So before, when you could do a Loom, and maybe it was just my account, I'm not sure, but you could record up to 25 videos for free. And then you could, obviously if you're hitting the 25 where you need to go to premium, you can delete a couple of those so you can still be in the free tier. But I noticed probably like maybe 2 months ago, and this is probably gearing up for the exit, like you had to actually upgrade. You couldn't use the free version anymore. So even if you use 25, they wouldn't let you delete it. I think they would delete it, but you're still kind of, you know, forced to be mandatory in terms of upgrading. So I ended up just using another free tool that was kind of like a lookalike of Loom, and it did the same thing for free. But it made sense. I mean, I think with kind of the pressure, there maybe was a flattening out, and kind of to address that, there's little hooks that you can add to add some revenue channels. And just that one change, definitely probably contributed to millions of revenue. And, you probably know this pretty well, like tools like I think it's like userstory.com, Amazon and all these, maybe I think it's usertesting.com. So, companies like Amazon and Netflix, they invest millions of dollars in customer journey mapping and user experience research to just optimize the funnel. And then you mentioned this earlier, like if you're canceling Hulu, they can ask a couple automated questions to maybe get you back to like a discounted rate to kind of, recover that revenue.
Sure.
So seeing those hooks have been pretty interesting.
These are all for-profit companies. No matter, oh, we're free, like come join, come use. We just want to delight customers. Like at some point, it's purely psychological to basically get you to pay as much as possible. And I've always observed that in non-competitive markets, you probably can capture like 30 to even 40% of the ROI that you deliver. And then in competitive markets, it's more like 10 to 20%. And so, that's the goal. Like, if they do this sort of ROI calculator, like, then that's what they're sort of aiming for.
Yeah. And we got a couple questions here. So, breaking into VC. So, this person looks like they have a product management background, thinking about business school. What could be some frameworks or some strategies that maybe a product manager could use to maybe try to break into VC?
Don't go to business school. It's a waste of money. I'm speaking as someone who didn't.
Yeah.
I just, there's a profile and archetype of person who goes to B school if they really want to like rapidly change their industry and sort of focus.
Yeah.
That's positive. You kind of take 2 years off and you have an exploratory, like, hey, I'm thinking about doing my next thing. Honestly, some people go to business school because they have nothing else to do and they want to like meet their future partner. Like, it's a mix of things. But I would say a product manager at like I assume they're a tech product manager. Like that's like a pretty extensible role. Like you do analytics, you maybe know SQL, maybe you're familiar with these like design tools, or you work with engineers. Like that's a pretty related to venture capital diligence type of thing. I would say read a lot and consume a lot of information. Newsletters, that type of thing. But like that, actually, how to really break in is you befriend a venture capitalist and you share investment opportunities. It's like one of those jobs where it's like Rudy Rudiger, who like walked out of the Notre Dame football team, like just show up and be like, hey, can I play once? And like and the version of that of walking on is like sending a couple of investments to you. I mean, Joel, I know you do direct investing, or me, I do direct investing. Like if someone knows your profile and like what you're looking for, and someone knows my profile, and they send you two things, 3 things, 4 things, 5 things, like that can evolve to be whatever it could be. Maybe it's a full-time role, maybe it's a venture partner role. I actually also think investing in funds is a good idea. So like investing as an LP, even a small check, like you'd be surprised how many venture capitalists will just be like, oh yeah, you put in like 25K, 50K if it's a smaller fund, just to sort of like get involved. And then you get exposure that way. But yeah, it's really rewarding and it's a wonderful job and enjoyable. But it's also very hard. It's also it's again, not as hard as entrepreneurship, of course. Entrepreneurship is 10 times harder, but like I guess it's hard to be really excellent.
Mm-hmm. Yeah, I agree. I mean, I think somebody told me recently, like, if you wanted to meet somebody that's very influential, I know someone that's actually connected with some very famous people, and his strategy was to do what you said, kind of get to know them, think about what they care about, and actually donate to something or contribute to something that they're involved in. So if they're involved in some type of charity, just say, hey, you know what, I liked what you were doing. I know you're really busy, but I actually donated to something that you're involved in. That kind of gets their attention a little bit, because they have to, give you their attention because you kind of contributed to something that maybe they posted on their Twitter feed, or maybe even on Facebook or something, like, with their family or something. And you notice that, those attentions to detail definitely can give you an edge. And then to your point, like if somebody's a product-led growth investor, and you found like 3 really interesting deals that are really hot deals that are relevant to what they're working on, I think that could definitely at least spark up a conversation. So I think that's helpful.
I think it's just interjecting me. I think it's a very clever idea. Like first, I mean, donate to charity, because the world is in pain, and like there's a lot of people who are having difficulties and issues.
Yeah.
And not just people, environments. Like there's ecological causes. There's a lot of stuff there where resources can go to.
Yeah.
I would say that the best way to sort of get someone's attention is show like appreciation or acknowledgement or recognition of what they're doing. That's special. That's just a human thing that everyone wants, right? Like, Joel, you're a really talented interviewer. Like, I really enjoyed that interview you did with Farooq, and I loved how this, like, send something sort of specific. If you got that email, you probably respond, and like I get probably a couple thousand emails a week from founders and people and other folks and newsletters and everything. But like, I should read them. And if I see something that's like that shows that those pieces, like I'll give it some love, but also just value additive stuff, like show and like offer value even before, and be confident about it, and be like, hey, like I have this really interesting company, and I not like, oh, I'd love your feedback on it. It would be like, oh, I think this could be a really cool opportunity for Preface, and here's why I like it. Here's 3 bullet points. I'm happy to talk for 5 minutes on it. Or I can introduce you to the founder. Just let me know. And it might take 1 or 2 or 3 of those, but if you demonstrate like a history of being valuable to folks, you engender like real collegiality. And that's true of everything, like even friendship, right? Like what if I have a friend that like shows up for me like in really hard times, like, or good times, but probably even hard times even better, like several times, and they're just there, like I got time for them,
Yeah. I mean, something that kind of blew me away a little bit, a couple of weeks ago, I run an online business. It's one of the, operating businesses that I own. And within the funnel, there was a marketer that came in as a prospect. And the marketer was like, hey, I know you're not looking for a marketer, but here's a quick video on some things I noticed in terms of your funnel. And, just watch the video, no pressure, but hopefully it helps. And I watched the entire video. I was really curious. So that kind of just piggybacks off of your point. Just take notice of something that somebody's working on. And even if it's through a weird, an unexpected channel, if it's valuable enough, they may actually just give it a second look or watch like a couple seconds of it. And then they may come back and ask some questions to double click on that. So I thought that was pretty creative or interesting, and not creepy either. I was actually kind of moderately impressed by the way that they got my attention. So
and that's a much more classy way. Like, look, could that person have like found out where you're speaking at some event because it's publicized, and like captured you, and like as you're walking off from the stage and you got to go to another call or something, and like stops you, like, hey, I'd love to just like 2 minutes of your time, like just be and also too, maybe this is a little bit of the hippie Californianess in me, but the right things find you. The right things find you if you, again, if you to my earlier point, and maybe it's a good kind of like wrap up point, like to my earlier point, if you have a good process, and you're earnest, like, and you actually aren't afraid of volume. Like, you shouldn't volume not for volume's sake. You don't need to
Except
do
for
all
dating,
thousands.
though.
Yeah, except for dating. Yeah, yeah. But like, what's the equivalent for
So
dating? Like,
I actually think volume in dating is okay. Obviously, you don't have to go on all the dates, but I just think in pipeline. But like I think the more people that you meet, like, look, I mean, if you're trying to like find a significant person, right? Like you're trying to get married or whatever, like I feel like you might have to meet a good amount of people to maybe just figure out like what you like,
you
and
kiss
and
you
then
kiss a lot of frogs, Joel, or what? I'm just kidding.
I mean, it's a different podcast. I'm married now with two kids. Hey, by the way, I'm married with two kids, right? So
There you go.
maybe that's a good track record. But yeah, that's definitely a different
Yeah.
podcast, man. That's that's the Farooq relationship
Yeah,
podcast.
sure. I totally have points of view there. Yeah, but like, okay, maybe if we did use the dating analogy like
Mhm.
for a second. I mean, like, if you wish to find someone who has like a certain set of personality characteristics,
Yeah.
or like maybe like loves animals, like
Hmm.
if you go to an animal shelter and like a volunteering thing, like maybe that's not my first thing to
Hmm.
do on a Saturday morning, but like if
Yeah.
that was something I was like really into, if you were passionate about it, like. I would show up there and enjoy helping animals, but if I happen to meet some people, like it's probably more likely that's going to
Hmm.
happen there than
Yeah.
like than like some fashion line like building having like new fur jackets. Like you probably won't
Hmm.
find as
Yeah.
you probably won't find as many animal lovers there. So
Yeah.
anyway, like find your setting and people,
Hmm.
and have some patience, and then yeah, just like and then once you feel confident in that sort of I'm in the right place, just
Hmm.
put your head through a wall, and then eventually
Yeah.
break through.
And
I'll
when I mean volume, I don't mean take all the meetings or whatever analogy you want to use for dating, whatever taking a meeting mean. Maybe that means I mean volume in like pipeline, and then let the filter kind of filter
Sure.
that down to maybe three people, because there's so I think, I want you to kind of talk, and I know we're almost at time, but I want you to talk to me about the power of disqualifying as well. So obviously we always talk about qualifying, but in enterprise, it's very important, as somebody books a meeting, that's, time is money, right? So it's very valuable to disqualify people immediately out the front. If you already know they're not a good fit based on kind of your cool process, it's much more valuable to do that disqualification process, to ensure quality and a higher likelihood of closing. But I don't know if you had any thoughts around that.
I
Um,
love saying no to people. I love
yeah.
saying no to people. I love saying no to things. I love saying, well, nope, can't do it. Sorry.
Yeah.
I actually, it's so freeing because okay, if you inherently say no to something,
Yeah.
if you say no to something, you're inherently saying yes to something else.
Oh yeah.
So I'm
Hmm.
saying no to this, coffee meeting with so and so. That actually is saying yes to all my other initiatives and
Hmm.
things I want to do. And if you take yourself out of your own head for a second, like if you're honest about like where an engagement can go or a meeting
Hmm.
can go with the other person, to be like hey man, like honestly, like I don't think this is going to work, like I'm really like strapped, we've already made a decision for end of year sort of budget cycles, we're probably going to go with this kind of customer, here's why we made the decision. I'd really encourage you to do like the following like next time, and yeah, add me to your updates and stuff, but like just yeah, I don't want you spinning your wheels.
Hmm. Yeah.
That's a very nice and classy thing to say to someone,
Yeah.
and it's and people respect that. And
Mhm.
if you get out of your own head and you think long term about like the potentiality of like relationships, and maybe that one person, like 6 or 7 years from now is in a position of like allyship, and they'll be like, you know what, Farouk, I remember that one podcast we did like 7 or 8 years ago. Like you took time for me. Like guess what? I just did this following thing, and like I know you wanted it, and here it is. Like
Mhm.
like it
Yeah.
could happen. It could happen.
Yeah.
But also too like like it's the disqualification piece is also like maybe that the time spent in the today, or or another time in the near term could have been wasn't possible, and I made that
Mhm.
decision because I was
Yeah.
excited to meet you and spend time and share with your audience, and it's great, like
Mhm.
but saying no is great too, and you probably respect that, and
Oh,
maybe
yeah.
yeah, yeah, what if you're like what if you emailed for this like this interview, this podcast interview, and then um they like I rescheduled 4 times. Like what a
Mhm.
jerk, right?
Yeah.
Like couldn't and like will you think of me well? No,
Mhm.
and like like, did I waste your time? Yes. Right.
Yeah.
So don't want to do that.
Totally agree. Well, hey, I know we're at time. Maybe you can share, one or two of your biggest learnings in the last couple months, and maybe we can wrap up with that.
Biggest learnings in the last couple months.
And it could be, and it's pretty loaded. I mean, it could be personal, it could be professional.
Yeah, sure. Health is wealth. If you are a healthy person, and that is physical and mental, but I would say even like physical is like the first one that people don't do nearly enough because like the US is majority obese. Like if you're a healthy person, you will be a better brother, sister, mother, father, business person, everything. And it actually is a good investment, and it's like into your long term, even if it's painful in the beginning. Because it's like that's an important learning. And then I'd say the second learning would be about resilience. I am so wildly confident in how I spend time professionally that I know that like the results will speak for themselves. And so even if there is lack of evidence given like the time of entrepreneurship, right? Like, like, oh hey, like, your fund's performing well, doing everything possible, but like you haven't had like a $1 billion exit. I'm like, yeah, the fund's 2 years old. Like, like it's not supposed to. But it's totally fine because I have like deep confidence that like the process, how we help and what we do is supremely valuable. And I don't know, I don't want to say look back and smile, but like at some point I probably will. Hopefully that helps.
Absolutely. Well, Farooq, this was so amazing, man. I mean, I really enjoyed this conversation, and not bad for winging it, right? I mean, so just love kind of just taking conversations in the directions they go, and super organic. So appreciate all that you do for founders, for the community, now my community, and super grateful. And hopefully we do a cocktail or something in the next couple months.
That sounds good. All right, guys. Thank you. Talk to you soon, okay?
Bye. See you.
Bye-bye.